Hello and welcome to Chartbusters. Well, in the next half hour, Rod, we're going to tell you all about the markets. We're going to pull in a couple of managements. We'll also get you a couple of technical calls as well. I'm Nigel D'Souza and joining me is Mangalam Malu. Well, Mangalam, a bit of a down day. We talked about the Bulls, the Bears. Now you have the Hawks as well in there. And hawkish commentary coming in overnight from the Fed. Well, that's what seems to have spooked global markets on the whole. And the Indian markets as well. We're down close to around 130 points odd. But that said, from the Nifty itself, a few stocks are moving to the high point of the day. Asian Paints, pull up the intraday chart out there. That one is spiking up as we speak. Dr. Reddy's as well is doing pretty well, and that as well moves to the high point of the day. The pain point really is the Nifty Bank. Yet again, it's down, and it's down 450 points today.
Well, you speak about bulls, bears, and hawks. When these things combine, two animals need to be focused on. One is the kangaroo, which is going up and down, and second is the owl. All investors and traders should be a wise owl, sit aside, and probably monitor the moves as we speak. Because, you know, after a near 2,200 point rally over 2 days for the Nifty Bank from yesterday's high, it's actually corrected almost 1,000 odd points, closing in on that 200-day moving average for the Nifty Bank. That's something we'll monitor. Even the HDFC Twins, after a big rally on Monday, from the highs of Monday itself, we've seen a near 8 to 9% sort of correction on both those counters as well, currently sitting at the low point of trade. So we'll monitor this situation, but the screen on the mid-cap end of things is a totally different picture. We have nearly two stocks in the green for one in the red. First up, all the top stories that we're tracking this are Nifty below 17,900 mark on the back of weak global cues and Fed rate hike fears. Nifty Bank, the worst hit, while power, metals, healthcare rally. Mid-caps outperform.
Tata Steel sees the India sales volume surge by close to 10% on a year-on-year basis. The stock trades higher with a gain of close to around 1%. Marico, though, they see consumption trends slow down as rural weakness and global cost inflation weigh on demand.
Mahanagar Gas is the other one which is higher in trade in an otherwise weak market, but good for mid-caps as it's hiked its CNG prices by 7 rupees per kg. It's now 67 rupees per kilogram. PNG gas prices too have been hiked.
Rail industry as well, one of their facilities partly shut down its calciner plant that's in the Visakhapatnam unit due to low allocation of raw petroleum coke by the Directorate General of Foreign Trade. On the back of that, stock is down 2.5%.
Barbecue Nation trades lower after a large trade where 16% equity worth 727 crore rupees changes hands. TCI Express, meanwhile, is buzzing after Jefferies initiates coverage on the stock with a buy rating target of 2,300.
Well, we got a business update that came in from Paytm, and for the time being, at least the street likes it quite a lot. Remember, the stock is still down more than 70% from its issue price. But as we speak, that one's moved to the high point of the day. So keep an eye out on that stock. And from the broader markets as well, the mid-cap index continues to outperform. Take a look at a few of these stocks. Oberoi Realty, that stock has spiked up. It's moving with good volumes. Strides Pharma, yes, it's being a big underperformer. The stock fell all the way from around 900 rupees, closer to around the 300 rupee odd mark. But now, in the last, I think, in less than a month, the stock has given a return of close to around 25% from the recent low as well. And some of these other stocks like NBCC as well, moving well as we speak. But how do you trade the index? Ashish Kayal joins us to tell us exactly that. Hi, Ashish. Morning. What's the trade on the index? Do you think that we're going to be breaking down now? Now, put together the last couple of days, well, we've seen a bit of a correction from the peak. Do you think that we go back to around 17,500 odd? Or do you believe that you'll be looking to get in at some point of time? Go ahead.
Hey Nigel, morning to you and all the viewers as well. See, the overall trend for Nifty had been positive for 20 days. We can clearly say that since the low was formed at 15,750, not a single time we have seen a close below the prior day's low, which I talked about even last week. And this is the first day when Nifty is decisively breaking below the prior day low, which was at the level of 17,920. Now, also very interestingly, the last 1 day of move which we saw day before yesterday was because of the HDFC Twins, and both of them are at the level where they opened on that specific day. So it seems that the entire movement was driven by news, not by the participation from the broader space. Having said that, I think this is an opportunity where we can still go long. I do not see it going towards 17,500 in a rush. We are back to the gap area which was created 2 days back, so that can act as a support. So 17,790 is the support on the downside. If that gets taken out, maybe another 50 points on the downside, but I would use that as a buying opportunity, keeping 17,700 as a stop loss, and expecting index to move back towards that 18,000 level. So buy on dips is the strategy that I am adopting right now.
All right, buy around 1750 to 1780 with a stop at 17,000 with a target of almost 18,000. That's your call on the Nifty. The Nifty bank also closing in towards that 200-day moving average. Individual stocks, what would you trade, Ashish?
The first stock pick is going to be EIH Hotel. We can clearly see the sector is buzzing around. The stocks in this sector has been going up, and EIH Hotel currently quoting at 169 showed a very good up move with volumes breaking out again. So I will go long on EIH Hotel, keeping a stop loss of 163 for the target of 181. And the next stock on the buy side is going to be our sugar. Again, the sector is buzzing. We can clearly see the sugar stocks have a dream run that's going on, and our sugar is just about to break out. So long positions can be created here. Stop loss can be 762 and target is 845.
All right, we take that point, Ashish. Nigel, the point on Paytm itself, while there has been an update on the numbers, what the street perhaps likes is the CEO telling shareholders that, they will achieve a EBITDA break-even in the next 6 quarters. The real problem with all these new age businesses is that there was no clear strategy of breaking even on the operational front as well as the bottom line. But here, the fact that the CEO is saying that over the next 6 quarters, without compromising on growth, they will achieve EBITDA break-even is giving the street some sort of hope. But then again, we will monitor these numbers as we move along the quarters and, whether the promise that the company has made will be achieved or not. If they go ahead and do that, good on them, because we have seen a correction from the top on the stock itself. So that's about Paytm sitting with a gain of almost 3% With that, we shift focus to a special segment where we get you a few ideas for profit coming from our colleagues at Money Control Pro. Madhu Chandaje Day joins in today.
Despite its recent outperformance, we are looking at AU Small Finance Bank for a number of reasons. This bank offers a unique combination of aggression, leading to very high growth. In fact, growth has come back in a big way in the last reported quarter. It also has a retail-dominated but predominantly secured asset book and has managed its book quality much better than peers amid the COVID challenges. The NPA picture improved and collection efficiency rose in the last reported quarter, and the bank carries buffer provision, thereby suggesting that incremental provisioning requirement will be lower as the economy improves. The bank has built up a high-quality retail-centric deposit, and the reduction in cost of funds has aided margins despite a largely secured book. Finally, with adequate capital and substantial investment in technology, it is ready to take market share. The valuation is at a steep discount to its IPO listing valuation.
Madhu, thanks a lot for that. By the way, just pull up the intraday chart on the Nifty. We've moved lower. We've just gone below that 17,800 odd mark. And I think let's see the stock that's pulling us down. Yeah, the big boys, the HDFC twins, both of them have moved to the low point of the day. You have TCS as well. That's down close to around 2%. Or those are larger weightages on the index. And also you have Infosys. So I think the HDFC twins, and you pull up the IT index, both those two, they explain why the Nifty has moved lower as we speak. Well, we'll slip into a short break, but on the other side, we'll get chatting with the management of Acrysil. Remember, they went ahead and they bought a UK-based company. We'll want to understand more about that. You stay with us.
Welcome back. Let's get chatting with the management of Acrysil, because they've made an acquisition worth around 11 million pounds. That's roughly close to around 110 odd crore rupees. And this acquisition is that of Tickford Orange UK. And remember, the stock has been a big mover in the past over the last 12 months, the last 24 months as well. And as we speak, is holding out in the green. What the street would like to know is the synergy is coming in through this acquisition, and importantly, what kind of valuation that, comfort, or what kind of valuation addition that this acquisition will do to their books. We do have Chirag Parekh joining us now. Chirag, thanks a lot for joining in. I see the margins of this business close to around 16.5 odd percent. What kind of synergies do you bring in for it to come to your level of around 20-21%? When does that come? And secondly, 12 million GBP is what the company did in terms of sales. You bought it at around 11 million. How do you get it at less than one-time sales?
Yeah, good. First of all, thanks for having me at the show. First of all, I think it's a great natural and a strategic fit for us. This is the second acquisition which we did during the last six years. This company has been a great innovative and R&D company since last 35 years. It has a great channels across UK in the kitchen, bathroom, and in the yacht business. And this is going to benefit a lot to our company, since it's going to open up a lot of new channels and cross-selling opportunities. I think that's one. Two is that the technology of the seamless fabricating into the sink with the worktops is going to give a great value proposition, and this you can duplicate this across the world wherever we have the reach. Third is on the is on the margin side, on the sales side. Yeah, we have seen that most of the promoters of the company want to realize the value of their business. There are some personal agenda which they have, and I think it's time for everybody to realize the value. And I think so did the ex promoters of the company did. Margins side, I think the margins at 16.7%. I think it's a great value that we achieved. In fact, this is our current customer, which we've been supplying sinks to our first acquisition. And we did have a great chat, and it became a win-win situation for both the parties.
Okay, all right. So, Chirag, congratulations on this buy. It appears a bit of a steal, actually, but be that as it may, shareholders here in India will want to know more about it. So, 16.7%. When do those margins trend higher? Do you have a target on that? And also, I can see that at peak, it's down around 13.5 to around 14 million pounds. Is that at optimum levels, or can it do, even better than that?
No, so first of all, Nigel, we need to understand that this company was doing about 14 million pounds of sales pre-pandemic levels, and this was back to back in the last 2 years. So we do see that the pandemic level will fade away, soon, and I think going to get back to the original levels of 14 to 15 million pounds soon. I think we see it coming by as soon as next year, if not this year. Yeah.
FY23, it will go back. You're saying it will go closer to around that 13-14 million mark.
Correct.
And just a counter question, for 16.7% is what this business did of margins in the last year. But prior to that, pre-pandemic, what kind of margins was it doing? Was it better?
Yeah. So I think it was. I think it was around 18%. And I think what we plan to do, we're gonna bring in a lot of our bandwidth to this, and we're gonna, as we all know, that input costs are rising, and we plan to leverage out by passing on to the price rise to the customers. So our endeavor is that we go to the Acrysil levels, which are the EBITDA around 20%. So our company endeavor will be to target that 20%.
All right, we will await that 20% coming by. But for this acquisition that you made at around 11 million GBP, did you have to take some debt?
Right. Yeah. So the acquisition is funded by 70% debt and 30% by internal accruals of UK.
So 7.7 million pounds is what you've taken in terms of debt.
Yeah.
And that's denominated in pounds itself. What's the interest rate that you're paying on it?
Correct. The interest rate is less than 3%.
Oh, okay. So that's pretty good then. What about, there's yeah, go ahead.
No, sorry to interrupt. The acquisition is by our wholly owned subsidiary Acrysil UK. So whatever the acquisition is or the debt comes into our UK company.
Okay, just to confirm, there's no debt that comes in, right, with this company?
Correct. It's a debt-free company.
Okay. And give us a brief understanding. The ROE, I think on the con call you briefly mentioned, but what's the difference about this acquired company's ROE and currently Acrysil's ROE?
Correct. So our Acrysil's current ROE is, I think, around 28%, and the acquired company is around 24%.
Got it.
What happens to your overall UK business? Because, pre-pandemic, you did close to around 7 million pounds in terms of UK revenues. And now you're saying you'll do around 14 million in this itself. So immediately your UK business turns to around 21 million pounds, if you must. Where does this go? What is the expected growth rate out here? And margins, what are the UK business combined margins with 17-18% on this one?
Correct. So good question. So I think the way we have seen the first acquisition is I think in the last 6 years when we acquired was a £2 million business. We are going at the annual rate of £10 million. That's Acrysil Products Limited. So we are riding on a great horse here in the UK. That gives a lot of confidence to us. Based on this, what this current business of solid surfaces it is, we need to understand that this is not a quartz surface. It's a very specialized solid surfaces. It is a softer surface. It can be cut by wooden tools and all, can fabricate it. So it's a very niche business. What our aim is trying to do is that the quartz business is around 80% of the total market. So what we're going to do is we're going to bring in quartz worktops, and we are planning to launch this in UK. I think that's going to turn the whole thing around, and I think that's how we're going to scale it up. So yes, the UK business, as you're right, I think we are targeting around 20 to 24 million pounds, and
Okay.
the margins, if we're going around that, and even if I think even if you take 18% of EBITDA a year, I think we were looking at around like 44 billion pounds of margin. Yeah.
Okay, all right. So, for FY23 then, we want to look at it as one entity because shareholders look at it as one entity. You have said that your longer term goal is to get to around 1,000 crores of revenue. Now, given that you have capacity expansions that's coming on stream, you're going at a good run rate as well on a quarterly basis. I think 130 crores is what you have been doing. And also this acquisition comes in. So for FY23, what kind of a revenue number do you have in mind? Point number one. Point number two is, given that the margins will be around 16 to around 18% for this acquired asset plus the UK asset out there, what should the blended margins look like? So two numbers, revenues and margins, quickly.
All right. So yes, I think the 1,000 crore was our long-term goal, and with this acquisition, I think this has become kind of a mid-term goal. We are, as you know, been going at an annual rate of about 500 crores the last year, and we expect at least a 40% increase in sales with this. So if we go at the same run rate what we have been doing in the past years, and if we take the history of the last two years' time, yeah, we should be looking at around 700 crores, 650, 700 crores. And I think as you can see that our endeavor is to do the EBITDA level at about 18-20%. So if we are looking at even at about if we hit the same run rate, the growth rate, and we arrive at 700 crores, then about 18 to 20% EBITDA, that would be around 140 crores, 150 crores. Yeah.
All right, we take that point. Thanks a lot, Chirag, for joining in. Hope to speak with you for a longer duration on your own overall business as well, apart from this acquisition. But the two key headlines, the fact that he's looking at 650 to 700 crore revenue in the next year with 18 to 20% margins. Back in the day, he would say 21 to 22% margins. But because of this acquisition, which is margin dilutive in the near term at 16-17%, that has been scaled down to around 18 to 20% How they scale this up is something that we will monitor. The UK business should give them around £21 million in terms of revenue. The stock has seen a big rally over the last 1 year. Currently, as we speak, has moved to the high point of trade as well. With that, we slip into a short break. Here's something that our viewers must take note of as we do that. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign called Informed Investors. It empowers you to make the right decisions with your money. Only computer-savvy investors are advised to opt for digital contract notes. In case you opt for an electronic contract note, a specific authorization needs to be given to the stockbrokers along with the details of your email ID. While placing orders in the market, always cross-check the records maintained by you with the details mentioned in the contract note. In case of any discrepancy, contact your broker or the exchange immediately.